Herkese merhaba. Londra İstanbul hattında piyasalara özel bir parantez açıyoruz. Bu bölümde çok değerli bir konuğum var. Ekonomist Timothy Ash'le birlikteyiz. Hi Tim, welcome to our show.
Hello.
First, I will ask the big picture, the balance sheet of this year. In terms of US, Europe, China markets, the real economy, what does 2025 leave behind?
Well, I guess surprisingly positive, really. I mean, I guess if you went the start of the year or this time last year when the big banks were publishing their predictions for the year, I mean, it was pretty nervy, right? I mean, tariff wars, US-China confrontation, obviously had the war in the Middle East and then the war in Ukraine. I mean, and people were very concerned generally about emerging markets, right? Actually, emerging markets have had a pretty good year, right? And I think that relates to a few things. Firstly, life's about expectations, right? And everyone was pretty suicidal at the start of the year. Remember April, the way equity markets were. And then I guess Trump, Trump didn't do what perhaps the worst case scenario, and actually has been quite nice to China, right? So I think that was a pleasant surprise to the market. The tariff hit has not perhaps been as aggressive as possible. I think partially also that countries, they played Trump. They were very eager, not to get into an escalation war with Trump, right? So they gave him little wins and kind of tried to normalize trading relations as much as possible. And then I think the weak dollar certainly helped many emerging markets, right? And I think there, perhaps with the exception of Turkey, well, actually maybe a little bit Turkey as well. I mean, most central banks post-COVID got ahead of the inflation story and aggressively tightened, right? And then as the Trump presidency came in, the expectation had been of a strong dollar. It was a weak dollar. And actually, that really helped EMs. It underpinned EM currencies and it allowed a lot of central banks actually, the strength of their currencies helped, again, anchor against inflation. And it gave space for those central banks to cut policy rates, right? And that helped, in a challenging global growth scenario, that definitely helped. So we've seen local markets in emerging markets perform really, really well. I mean, it's been a disastrous asset class for a decade. And actually, this year's been an incredible year, and actually now 5-year track records are in positive territory. So that's kind of been positive. The other angle, I guess, maybe that I'd say is again, it's the impact of Trump. I mean, you never quite know what Trump's going to do next, right? Who's in the crosswires? Who's the target? And actually, what we've seen is, and it was a bit before then. I mean, for the last decade, perhaps you could say, or maybe 5 years, you could say that often the top-down EM beta story was positive, right? For lots of different reasons. But actually, when you came to allocate assets to emerging markets, it was really hard to find a good story, right? I mean, across the board. But actually now we're seeing kind of reform impetus in many, many countries. You've got Argentina, Turkey sort of turned around in terms of economic monetary policy, certainly. South Africa, Pakistan, even Lebanon, there's been a kind of positive story over the last year or so. So I think, so that there are good country stories that tick boxes for emerging market investors. But as I said, also, I think when faced with this big risk from Trump, you don't make policy mistakes. South Africa is a good example, right? You've got this government of national unity. South Africa has been targeted by Trump, this sort of, white genocide story, which we know is it's a completely ridiculous story. It's fabricated by Trump. But, South Africa could have been vulnerable in that context. So the fact that the GNU, the Government of National Unity, is held together, I think is partly a reflection of this external threat from Trump, right? And I think that's anchoring policy generally across emerging markets. Don't make mistakes in a tricky global environment where Trump can do anything. Be very orthodox in terms of policy.
So when you're talking about the emerging markets in the big picture, you have counted Turkey as having a good country story, right? Did I get it correct? So I was just going to ask where Turkey sits in this big picture. I mean, the balance sheet of the first 11 months, I mean, the 12 months of Turkish economy. How do you assess the outlook of the Turkish monetary policy?
Well, I mean, it could be worse, right? I mean, look, compared to where we were 3 years ago, right, in terms of the unorthodox policy that we had, devaluation, constantly increasing inflation, concerns about systemic risks in Turkey. We've moved on from that, right? No one's really talking about systemic risk in Turkey. I think the changes we've seen implemented by Mehmet Şimşek, the guys at the central bank, we should celebrate that. We should give credit for, the positives from a Turkey perspective, I guess, is that, they have done some adjustment. They have increased policy rates, obviously very aggressively. Inflation, has come down from 70 odd to 30 odd. The remarkable thing in my mind actually has been the ability to increase foreign exchange reserves at the same time of get rid of the KKM. I mean, the KKM was a disaster, right? It was a huge systemic risk bubbling away. And I didn't imagine how they would be able to get rid of the KKM and at the same time increase foreign exchange reserves to near record highs. In recent years, Turkey has struggled with reserve accumulation. So they've got a solid base of foreign exchange reserves. They've got rid of that disastrous KKM scheme, and they're normalizing. All the financial alchemy that we saw in the previous administration. They've kind of got rid of a lot of that. It's kind of normalized. It's a bit easier to understand. Fiscal is tighter. Hopefully, it's going to be a bit tighter and help some of the heavy lifting in terms of monetary policy. Look, and I know, it's painful, and I'm a foreign investor, and obviously, I'm sat back. I'm not living in Turkey. I know it's painful. I know high interest rates, the real appreciation of the currency is causing a lot of problems for exporters, particularly textiles. Growth has slowed a bit, although actually not that much, to be honest. We had the third quarter GDP print this week, and it was okay, really. It could have been a lot worse. I guess the challenge for us, inflation is still high. The key problem remains inflation, right? Mm-hmm. And it has reduced, but it's high and sticky. And, expectations of a 20-odd% inflation this year, looks like to be disappointed. I know the authorities are now, Şimşek is talking about 31% end year. We'd have hoped that it have been better, that we'd have achieved more in terms of the counter-inflation story or this inflation story. Again, I've long argued that in the end, there is a growth versus inflation trade-off, right? You can't meaningfully get inflation down to sort of, say, teens without surrendering some growth. And again, growth has been resilience. Unemployment is high, but it's not really increased that much. And I don't think I've ever seen a successful disinflation where there hasn't been some growth sacrifice. So again, and I think the authorities, they're trying to balance everything, right? They want to reduce inflation, but they're sensitive to the real economy and the growth story and unemployment and all this kind of thing. So they're trying to achieve many, many things, and some things have to give, and maybe the disinflation has not been quite as successful as it could have been.
Yeah. So, Tim, you say that it could have been worse when we're talking about the general conditions of the economy. So we have to celebrate where we are when we compare with 3 years back. But the inflation could have been better, you said. So there is really a slowdown in this inflation. So how do you think central bank will react to this slowdown in this inflation? How much will the rate cut cycle slow down? For example, what do you expect on the 11th of December?
Yeah, well, look, the message sold by Mehmet Şimşek in the central bank, or the governor at least, is that, there were one-off factors that meant that inflation didn't fall as much this year. Food and agriculture, obviously there was droughts, there was frosts, the education and housing, prices were a constant pressure point on inflation. Yes, true. But I still think that they had this opportunity in a way. I think they had political capital. You could relate it also to the politics of the country. Obviously, go back earlier this year, you had the Imamoglu arrests, all that, the stuff around that, the demonstrations. Actually, in a way, I think that the central bank and Şimşek's team had, Erdogan relied on them to deliver financial stability in that period of political instability. And I think they could have been a bit more ambitious in terms of what they did in terms of policy rates. Obviously, not cutting as much, not cutting as early, and again, making a really landmark impact in terms of inflation. Obviously, they see different things in terms of the political economy of the country. But I think what is pretty clear is it's a fairly dovish. The governor, I think, is fairly dovish, right? We can debate the dynamics within the MPC. I think it's well known that there are three significant members of the MPC: the governor, Hatice Karahan, and Cevdet Akçay. Cevdet generally is perceived to be the hawk, Hatice perhaps the dove, and the governor's in the middle. It'll be interesting, looking forward when Cevdet retires. I think the assumption is he does retire in April. There's been lots of talk about potential people who could join. There's a new advisor, ex-JP Morgan, well respected, seemed to be close to the governor. Look, I think we shouldn't expect overly tight policy, right? My sense here is, firstly, it depends on the inflation prints, right? Actually, they've been pretty volatile, to be honest, right? We had a couple of good months, a couple of bad months, and then it looks like maybe as the year ends, maybe a couple of better months. But
so how much room do you think the central bank has for rate cuts, both in December and in 2026?
Well, I think December, the market probably will be okay with another 100, I would imagine, right? Again, I think inflation is the number one problem in Turkey, right? Mm-hmm. And the closer we get to elections, the less scope the central bank will have, I think, to run a tighter policy. So I would again argue that if you're going to be serious about the disinflation, you should be doing less in terms of policy rate cuts now than later. But I would have said that story a year ago as well, right? So we'll see. Look, the market is holding up pretty well. Again, there is still this fundamental confidence in Karahan. He's done a good job. Look, as I said, where we were and what they've achieved is pretty remarkable. So we have to give credit to them.
Yeah.
I just think they could have been a bit more ambitious in the disinflation, right?
Okay.
And, but I accept. You could argue that maybe those one-off factors are correct. Maybe fiscal policy should have done more. Maybe we'll see fiscal doing more in 26, which will enable the central bank to be a bit slower in terms of rate cuts next year, right?
My last question will be short answer, please. Do you expect a continuation of the real appreciation of TL? Do you see the risk of dollarization in Turkey?
No, look, I think there's no alternative to the real appreciation story. It's a major anchor for disinflation. Obviously, it's painful for certain sectors of the economy. Again, the Shimsheks, etc., would argue that for a decade, those companies have benefited from a weak currency and devaluation, right? And they should have invested to improve productivity. And actually, if you look at the current account position, the current account position is decent, right? We're not seeing, normally when you see, aggressive real appreciation, it feeds through in both the trade balance and the current account balances. They're kind of okay. So I don't see pressure there. So I think, continuation of real appreciation is likely. The last year, actually the exporters were helped somewhat by the strong euro against the dollar, weak dollar, etc. So they were able to, their competitiveness issues in Europe particularly were moderated somewhat by the strength of the euro, right? So that's helped them. But I don't think there's any alternative to the current policy, right? And look, if you go for real depreciation to help the export sector, for example, the price for that is higher inflation. Turkey's been there before, right? I don't think competitive devaluations is the answer in Turkey, right? I would argue, and I think structural reforms, competitiveness improvements, structural reforms should be the answer, right?
Yes, Tim, thank you so much for making this time for our interview. Thank you.
My pleasure. Good.